This is NVIDIA in 2025, the most watched stock on Earth. It finished the year up 35%, but only if you survived a 37% crash to get there. Most traders watched price this year. Funds watched something else. Banks watched it. The algorithms that actually move this stock watched it. It's called Anchored VWAP. And one man turned it from an institutional execution benchmark into the most powerful discretionary chart tool retail has.
So my overall style is swing trade with the trend using multiple time frames. My key tools are simple moving averages and the anchored volume weighted average price. I never try to fight the trend. Every time I do, I seem to get burned.
Brian Shannon, 35 years trading, the man universally called the godfather of the Anchored VWAP. Over the span of 5 videos, this trading course will cover his 9 setups, his complete system rules, distill his 35 years of trading experience, showcase a real example account on a real NVIDIA chart, all with interview clips of the rules in Shannon's own words. After this course, you will become a certified Brian Shannon Anchored VWAP expert and know the entire ins and outs of what real institutional volume analysis looks like.
All the moving averages have flattened out, and all those moving average crossovers that some people like to say are a buy signal, I say that they represent indecision and are a reason to be out of the market or switch to shorter term timeframes. Moving average crossovers represent indecision. And after a long-term decline, that indecision is typically accumulation. We don't know it until the market breaks higher and it's above all those longer-term moving averages like it is now.
Here's the whole thing in one sentence. You pin the anchored AVWAP to a moment that mattered, time, event, or a price, and from that moment forward, it tells you the average price everyone has paid. If price is above the anchor, the average buyer since that event is winning. Below it, they're losing. That's it. That's who's in control.
Because it tells the truth. It takes price, volume, and time and tells us the truth of who's in control from any point we choose to anchor from.
And underneath all 9 setups is one rule Shannon's trademarked. Only price pays.
It means at the end of the day, we're in this to make money. We can look at all the oscillators, indicators, reasons, opinions. There's only one thing that matters. How is price behaving? Some people will say the most important price is the price at the end of the day. That's the worst price of the day because business is done. You can't do anything with it. Your most important price is what did I pay for the stock? How do I manage risk around that? How do I protect my profits? So only price pays.
April 2025. NVIDIA is a disaster. DeepSeek crushed it in January on 4 times normal volume, and by April 7th, it had bled more than 40%, printing $86.59 on a full-blown panic. Now, Shannon does not touch that. He calls catching falling knives the dirty work. He lets other people do it, and he waits for the anchors to line up overhead. This is the anchor taxonomy. His 3 flavors: event anchors, like that DeepSeek crash, time anchors, like year-to-date, and price anchors, like the April low. After a crash, the old ones don't catch the bottom. They sit above price as a ceiling. The year-to-date VWAP, the DeepSeek VWAP, and the 50-day all pile into one zone around 115 to 119. That's not a level. That's a wall of trapped buyers waiting to get back to break even.
These are levels of interest. Why? Well, because the average participant from the beginning of the year is now going to be in there defending this stock. Another group says we're going to stop selling because it's at the year-to-date anchor. Another group says we're going to stop selling because it's at the earnings anchor. Why are these people in there? Is a 50-day moving average magic? No, but we all use it. We all have it on our chart. So we use that as a reference point of value. When it pulls back that hard, we say, let's look for evidence there's buyers in there. There's levels of interest. So I let other people do what I call the dirty work of risking their money and buying the plunge.
He doesn't buy the dip. He buys strength after the wall breaks. May 7th, NVIDIA closes back above the 50-day and the event anchor. May 12th, it clears the year-to-date line at 119 and closes at 123. The buyers are provably back in control. That's the entry, not the bottom, the reclaim. 250 shares at 117. Stop at 110 under the base, 1.75%. Over the next several weeks, NVIDIA runs through the May earnings pop to 143 and keeps going. Sell a third at 135, a third at 143, trail the last third as it breaks toward 154. Profit, roughly $5,700. Account, about $105,700.
So people say buy the dip, and I say don't buy the dip. I like to be in the market in a position of strength. Let the institutions battle it out and create that zone that it can launch out of. And that measurement tells us where that happened.
Now here's the textbook version of the same idea. The base NVDA built from late August into late October of 2025. Instead of one anchor, you're going to drop 3. Anchor your first VWAP to the August 28th high up near $184. That's the post-earnings reaction bar, so it marks exactly where the last wave of buyers got trapped. Anchor your second VWAP to the September 5th low at $164, the lowest point of the entire base. Then bring up your rising 50-day moving average as the third line. Here's the whole point. Because the stock was going sideways instead of trending, those two VWAPs squeeze toward each other. The August high line drifts down, the September low line drifts up, and by the third week of October, all 3 lines pinch together in the high 170s, right around $180. That tight cluster is the Confluence. 3 independent measures of fair value all agreeing on the same price. And notice you don't buy inside the range. You wait for it. The signal comes on October 28th when NVDA closes at $201 on about 1.9 times its normal volume. Price clears the entire stack on a clear surge of institutional buying. The moment that cluster breaks, it flips from resistance to support, so your risk sits just under it. For a target, take the height of the base, roughly $24, from the $164 low up to the $188 ceiling, and project it off the breakout. That points to about $212. And the very next day, October 29th, NVDA topped out at $212.17. And that's a textbook Brian Shannon setup, multiple anchored VWAPs coiling into one price, the stock in balance until a high-volume close breaks it free, and a measured move that pays out almost to the penny. Anchor to structure, wait for the confluence, and let the volume tell you when the big money agrees. We just completed video 1 of 5, covering setup number 3 and 6. For our next part, we will cover setups number 1 and 2, chase the gap plus the earnings anchor. Be sure to subscribe as we're well on our way now to becoming Anchored VWAP experts. See you in the next one.
Money, 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 money.